All right. So I just wanted to take some time after of course, a couple of rough days in the market to talk about some of the after effects of CES and the effects of what Nvidia CEO Jensen Huang said, which kind of caused the tumble. This is Yahoo Finance. You see, we're looking at real fast quantum computing stocks, including quantum computing, of course, QUBT. Some of these look to be unrecoverable, and maybe I can make another video on that later on, but we'll just go through this real quick. Quantum computing, Wave, Quantum QBTS. These are stocks people got destroyed on. Me, myself as well, had very long biases on them, had positions on them. A lot of people got really kind of like crushed today, and that's okay. There's ways to come back and recover. We'll talk about a lot of that good stuff today. Rigetti, really devastating fall. Looks like it might not be recoverable. I mean, the things that Jensen Huang said, that statement is going to have some pretty devastating effects. Ionic, IONQ, devastating. Like a lot of these, we just simply weren't able to recover after. Good thing, hopefully, a lot of the traders are used to having stop losses and things of that sort. But said useful quantum computers are decades away, and when he said decades away, he said 15 to 30 years. That could like not be in some of our lifetime. Then they go on to say the sell-off comes after quantum computing stocks saw recent gains from Alphabet, Google announcing a quantum computing chip. So they had gains because of speculation. That's why these I have heard of these being referred to as speculative stocks. These are things that haven't happened yet. So I guess, part of this is kind of like bringing that into the light. These are speculations. These are possibilities. So that being said, I do want to switch over. And again, remember, I wanted to just run through a bunch of stuff. If you notice at the top, I have a bunch of different stocks open. Most of them technology stocks. Most of them affected. It wasn't only the quantum computing stocks. It pretty much affected. You could say all stocks, just I know I'm kind of generalizing, being vast, but for the sake of the conversation, I just wanted to run through a few things. And of course, this is being brought to you by the Harmonic Trading Club. And of course, we're going to look at things through a different lens. We're going to look at the market as it reacts harmonically. And that's why here we are with Red Cat. We're seeing it was moving, and this is fine. This is perfectly okay, because these are the type of opportunities that you get when the market is moving sidewards, of course, or when the market is consolidating. That's when you get your advanced patterns. You guys will see a lot of that in the course that I'm creating and building out in the playlist, just basically, on how to identify. Well, it's structure analysis and all it entails, but a large portion of it is going to be advanced pattern recognition, basically the recognition of harmonic patterns, because the market continues to create harmonic patterns, especially when it's moving sideways, but it can also create them while it's trending. They're primarily counter trend trading strategies, like meaning even though price action was coming down on here and fills this bad pattern, there's a bullish winner for a trader, at the fill of this D leg up here, and then he's out to trade. He then comes and creates this bearish move for a winner here. And then when he's done with that, he creates a bullish cipher move here. So one of the reasons I have Red Cat down as a winner is because it is still consolidating. It did not drop out. It did not, fall out of that zone, a lot lower than that. So it's still, the way I look at it, and especially with its last move, the blue, the advanced cipher pattern, that would not have been stopped out. You do get a retest of the beginning portion, which is the X leg, basically kind of like more of like a double bottom. But in technical theory, this cipher is still alive. You're still trading sideways. When we come down here and look at the RSI, it did reach an oversold level. It did start to push up. I wouldn't necessarily call it divergence. It would be great if we had the oversold with the divergence, but you do see the MA that I have on here pushing up under it. They could cross again, and this could come push back down for another test at that level. But I would consider Red Cat a survivor of the Nvidia CEO message. Moving on, of course, now this was actually on the list. Quantum computing was actually on the list first. And I'm surprised as I'm going back through this. I have to reclassify quantum computing as a survivor because it filled an advanced pattern. This is an advanced Gartley pattern filled. It did everything that you would want it to do. So a lot of people are going to be hurt or disturbed by when the drop actually happened, which is there, with that gap. But all this did was came and make it fill a Gartley pattern, which is a tremendous pattern to have a reversal out of. So traders who did not get stopped out, it depends on what they were doing, because let's just say this. Technically speaking, a trader should not have had any open positions with this sideways movement anyway. Okay, I'll just leave it like that. A trader, there was no trade for quantum computing going back into early December. It had been moving sideways. So a trader shouldn't be saying that he got hurt or destroyed on QUBT, because he should have never been in QBT. All traders should have been wanting and waiting and anticipating this drop if they understood the market harmonically. Okay, so take that with you. All the news did is bring it down and allow it to fill one of the most powerful patterns in the market. It's really all that happened. Advanced bullish Gartley pattern. It's going to give traders an opportunity to get back involved. Now, I wish that I could speculate on the potential or the success of this, but I can't. It has been oversold. We see the MA crossing under the RSI. You see, it would have been great if there was a little bit more bullish volume. There isn't. And then also there's an MA on the volume indicator coming over the top. So really can't say. Maybe there could be just a slight little tick down and retest of that $8.60, and then you could get a rally. That's all I can pretty much say about this one here. So I do have it in the survivor settings. I have QUBT down as a survivor of this, even though it doesn't look like it. Technically speaking, all it did, they should not have been trading it anyway. It falls in, drops in, and fills a Gartley pattern, which gave the traders an opportunity to trade from $8.50 to $11.12. So they still would have got over $2 in profit, which is, it can move the needle a little bit. Not as much as, of course, like what a $8.50 to $18, a $10 move, but there is some potential there. I don't want to talk about targets on it. I'm not suggesting anybody trade anything. We don't give trade signals. We just educate. We talk about what we see. We do technical analysis and things like that. I think that if it wasn't for them being in the quantum computing space, that QUBT might be okay. And it might be okay for people that just want to hold it, even though Jensen said that this is not even real. This is just speculative. All right. Next up, Pacific Biosciences of California. It is in the survival zone because it filled, again, an advanced Gartley pattern, which produced an amazing winner, of course, right? And it's kind of like the same thing. After that winner, traders should have been out of Pacific Biosciences. They should not have been trading it again. So remember, we're talking early December. And of course, it did come back and correct. And if anything, from New Year's Eve, they would have actually been winning again. I don't think that it would have been a good idea to be in that anyway, but you can see the harmonic movements. Pacific Biosciences would have actually been a winner. I have that in the survival space because anybody was dealing with that, they actually survive, if not even potentially won. Bit Digital, a big one. I have this one in the survival space because of a couple of different reasons. One of the reasons, the same as what I just talked about for Pacific Biosciences, because on 12/27, heading into the new year, it filled an advanced Gartley pattern and fired off successfully to the first target, which is a 38% retracement of the X to D leg. I'm sorry, A to D leg, 382. That's why you see that there. So this was already a one target winner, and traders would have moved their stops hopefully up to break even. So when price action started to correct with all the news and all that other stuff from the last 2 days, they would have already won on this. So I kind of have it in the survivor area, even though there's no telling what could happen with Bit Digital. You could come get a retest of that again. If it does do that, that would probably give traders another opportunity, if they wanted to take another shot to try to break that 382 this time and get somewhere up to 618. Can't say for sure. I am completely speculating and just talking about what I see. So I have Bit Digital in the survival space. All right. Moving on, another quantum, D-Wave Quantum. I actually, just like I had QUBT, I have D-Wave Quantum in the survival space because it completed a very powerful move in the form of what you see me have here lined off here, this double bottom, and then this break and close above. Of course, you come down to the 618 retracement. This is the 2618 technique. 2 standing in double bottom here, and 618 standing for 618 retracement after a break and close beyond that structure where the double bottom was. Now remember, I am putting this in the survival space because even with all that and the bad news, the horrific ugly gap and the loss in price from $9 and wherever he was down into the sixes, still dropping back into that zone in which it was bought out of before. Now of course these quantum computing stocks are going to need some fundamentals to turn them around. They're not going to turn around just strictly off the technicals, because just confidence in them. Now again, this one was oversold at the time. Traders came in and took it from $4 to $6.68, couple of dollars on a recovery, very small, but it is still in that zone in which typically, if it wasn't for such a catalyst, traders would have been trying to trade this out of here anyway. Okay, but I have it in the survival space, at least for right now, with the MA coming up under the RSI. It was oversold. I wish that I had some divergence to go off. I don't, and I wish that I had some bullish volume. I need bullish volume and I need bullish divergence. I don't have either one of them. My confidence is low, but technically this is what the stock is saying, that there's an opportunity for it to at least hang in there. I wouldn't suggest that run up right there at all. Best case scenario is something that I would maybe think is that that it moves sideways and just hangs around and just does a bunch of junk. Okay, until another catalyst or another news event, a fundamental, something comes along that allows some form of a breakout. I'm not suggesting that at all. I'm just talking about what I see. It fell into a zone in which it was bought up out of perfectly before. The 2618 was perfect, which is in all you want is a retest of the previous high. It was a complete winner. And then traders would have been looking for extended highs above 1136, but unfortunately, people started pulling their profits out. Of course, you're going to pull out after you get a retest of there. That's understandable. And then you get the news catalyst, which kind of changed everything up, dropped it right back into that zone. So it's going to be hard to kind of say, just technically speaking. It's going to take a lot of confidence. The price point is still good at $6 for what these companies project to do in the future, but it's D-Wave Quantum. And I'm gonna need you guys to hang tight and just take a look and just look at some of the technicals as we go through this. You can see a lot of pretty cool stuff. So moving on to Canaan. Canaan is in the survival space because even though I got to come out some, I jumped in into basically the scalping time frame just to see if there was an opportunity. Canaan 2 basically kind of has that 2618 look. Here's the double bottom here for the 2618. That's the double bottom there. And then you got your break and close above all those structures, and then just dropping back down into the 618 golden ratio. So 2618, 2 standing for double bottom in this case, and 618 retracement after the break in that area. Just this right here is kind of like standard Fibonacci, standard harmonic movements. Nothing really special about this. Kind of like a reach actually on my behalf, just even having any type of confidence in it, I guess. Good things with Canon. Price point is very low at $1.93 right now. Was oversold on RSI, which caused some voters to try to come in. I wish I could have more to say about it, but what I had to do was I wanted to know what was going on down there. So I came in very close, kind of into like the scalping time frame, just so I could get a little bit closer. And then that's where I realized, okay, so nothing's really happened. It's just basically moving sideways. And if there is another opportunity, it's not going to come into $1.89. We're not that far off. We're at 193, $1.89. You could get, let's just say this, maybe some type of gap tomorrow. And if that were to happen, there would be an opportunity to trade Canaan back up $1.89 to $1.95. Very small move, but that's the only thing that's here. You can only trade what you see. You can only trade what the chart's going to give you. So that move is not, for most traders, it's not even really going to be worth it. 6 cents, but hey, that's what's there. So I did want to come zoom in and see what's happening and see what could potentially happen at market open tomorrow. Moving on, IQIYI. I have this in the survival mode because again, reacted harmonically. We are going back some to, basically late December. Not quite the winner that you will want in terms of this is cipher pattern, bullish cipher pattern. Not necessarily. You want to hit the 382. You want a 382 retracement from the C to D leg, and he didn't even get to target 1, which would have been a 382 retracement. So I might have to take this off the survival list. I'll tell you why I'm keeping it. So he didn't even get to target 1. Any trader who was long on it at the completion of the cipher on December 19th, they would have enjoyed that move from $2 to $2.80. Maybe not. It's way too small, not enough to move the needle. But the only thing I can see is there might still be some confidence because there is still basically, there's some structure there. There's some, I don't even want to call it support, but, it didn't draw down too bad. I would say that this is kind of far on the D leg. This is kind of that point right there is kind of far, like when he dropped into $1.93. But I think that this has a chance, but like I said, going to take a lot of fundamentals, and it's going to take a pretty strong catalyst to try to get this thing up out of that $2 range and start trying to push him up to, $2.30 something cents. Still not enough to move the needle on your account, but the opportunity may be there. I wouldn't touch it, but this is just what the chart is saying, that there was a filled bullish cipher pattern that did have a reaction, just not a strong enough reaction. And then, of course, all the other things that happened. This is where we are now. Clean Spark, is in the survival mode because it is, again, hopefully going to be able to stick off of the advanced bat pattern. Filled great reaction from $9 up to $11.50 to $2.50. But of course, the news catalyst came and took that all back. And also, unfortunately, he never would have even made it to target 1, which would have been a 382 retracement. from the completion of the pattern, so the fill and completion of the pattern up to $2.47. That never happened. But the fact that the pattern is there tells me that when and if price action more than likely going to keep going. I'm looking at RSI. I'm looking at RSI below right here, and tells me that this is going to keep falling pretty much. MA swinging over the top of the RSI, not oversold yet, telling me that very, very likely that this price action will push down. Maybe there's going to be a retest of that area, and then some traders might want to take another shot at it. It all depends. Really can't say, but it is in the survival mode because he only got to where he was because of the advanced pattern, the bullish bat pattern. Mara, basically the same story. I can move kind of quick on this. Mara filled advanced bullish Gartley pattern, came in around 1650, pushed up to 2066, so $4.50. But then again, you get the news catalyst that come and mess everything up, and it looks like it's going to be the same story. RSI needs a way to go before it's oversold. The MA is crossing over the top, and the volume is bearish. There's sellers in there, and it seems like these sellers are going to pull this thing back down to where it came, maybe even lower than that, than 1668. But when it does get there, you'll have to see where we are. You'll have to see if you're oversold at that time, if you have a bullish divergence at that time, if you have bullish volume at that time, and maybe there's a news catalyst to try to help this thing come to where it should have been going, which is around $25. If I just go and just bring the target on from A to D, yeah, right on the money. So $25. But I think that remains to be seen. You're probably gonna have to ride the rest of this week out. Market closed Thursday. Wake up and see what happens Friday. I think that Mount Mara is going to continue to fall a little bit. Can't hurt too much at this point, but maybe traders will get another shot at this bat pattern. Maybe they missed it the first time. That's why you have to understand advanced pattern recognition. Okay. Amazon, not so much of a tech stock, but more of an everything stock, a retail stock. Another one of those 2618 double bottom, break and close, 618 retracement, dropping into that zone. Didn't quite oversell, but showing some bullish divergence here, with the MA crossing up under the RSI and what looks to be at least a little bit of bullish volume in there. Really, really hard to tell. This is Amazon. This is different. Amazon still has a pretty decent price point at $222 for one of the top 5 largest companies in the world. Not so mad at that, but I would absolutely consider it a survivor of the Nvidia CEO comments. Plug Power, kind of hard to say. This one I'm basically just trying to say this one is very tough, but I do like the fact. I'll just be honest with myself. When you're talking about a trend, I do like that when we were back here, that you got a higher high, higher close, and you still got a higher close. And I would like to think, I would hope that this is just simply a correction, and it happens to drop right down into the 618. Okay, the retracement from the swing low to the swing high happens to be at the 618, oversold on RSI. You would think that there'd be more volume. There's not enough volume here. There's a little bit, but not enough of it. You want to see some divergence. The MA is coming up under it. The MA is coming up under the RSI. You got a little teeny bit of bullish volume, and then you do have your higher high, higher close, and then you got your outside return, your retracement, dropping you right into the 618. So I would consider Plug Power a survivor. Tilray, I'm going to consider it a survivor, even though pretty much it's moving. It's just a box. Price action push up here and then just starts moving sideways. It's not a good one. But now what that's doing is bringing in the opportunity for a bullish Gartley pattern. Should price point is already super low, $1.38. Should price point happen to want to go and test a $1.21. And if that were to happen, like I said, maybe not enough to move a needle on your account. You'd have to buy a whole bunch of them. I mean, a lot of them, like 1,000 of them, something like that. But there's the potential to go from 120 to, maybe $1.40. It's a 20-cent move. Probably not worth your time to even deal with this thing. You kind of, unless you are just a big fan of loading up tens of thousands of dollars on basically a penny stock. That's Tilray. We'll see what happens as the days go on. Okay. Resolve is a good one. So Resolve is not only in the survival space. It is because it had to survive the gap. It had to survive this horrific gap here, but then again dropped in and filled a advanced bat pattern perfectly that could be potentially traded out of there with RSI overbought. The only thing that we're missing is enough bullish volume. So the confidence for a trader really isn't going to be there. A lot of traders would almost want to jump the gun and say, forget it. I got a bullish bat pattern. I'm trading it. And they just go ahead and do something like say, I'm trading it when the market opens. And they say, you know what? I'm just going to go ahead and just put my, go ahead and if that were the case, I'd say, you know what? It's going to be a really tight stop. I'd say I'm either in or out. It would look like that for me. It'd be a super tight stop where it's not going to hurt me. The price is so low, it's not going to hurt you anyway, no matter how much you buy. And then you can almost make $1 from 290 to 3. You of course have to have pretty large contract size, buying a bunch of these shares at almost $3. A lot of them. Let them move $1 and make your money. All right, so that's Resolve. That's a pretty good one. So I think Resolve is the only one on the list that was actually like just basically just came and filled the pattern, no drawdown, no nothing. You're just probably going to need, some amazing stuff to go with it. You need something that's going to give you a little bit more confirmation, a little bit more confidence. The buyers did try to come in. The bulls did try to come in and take it. You close red like that, like you want. Next bar market green. I wouldn't be mad if a trader told me that he came and took a shot at Resolve for tomorrow. All right. Apple, of course, one of the big dogs in the market. This is really good. Apple had a couple of things going for it. Okay. It's in the survival pool for me. Completed A to B is equal to C D pattern. Then a symmetrical triangle. Usually signifying a breakout on one of these. Look like this. Come up out of it, come back and test it, and then go. So I wouldn't be mad at a trader that was confident enough to open a position in Apple based off of what he sees. The A to B is equal to CD pattern. He would have already entered here and won anyway. Here's the thing. He didn't have to be in there any longer because he would have already won the trade. He would have already got from the C to D leg. He would have already hit the 618 target, 2-target winner. So he would have already won. He shouldn't be dealing with it anymore. But what I'm saying is there's going to be another opportunity. Should this symmetrical break out, come back and retest, it's going to give him another opportunity right here. Somewhere in this area here to trade up really big. Maybe even, I wouldn't say that high, but maybe a retest of this area here. So I wouldn't be mad if traders were looking for a trade that looked like that. With again, the way the market is moving right now, I wouldn't do anything without a very, very tight stop, something like that. At least that's still going to give you the almost 2-to-1 that you want. That's how I would deal with Apple. But absolutely in the survival pool. ASTS, AST Space Mobile, again, another simple one. 2618 double bottom, break and close, 618 retracement. Just for the sake of it, I'll just kind of make the zone a little bit bigger, the entry zone. In between the 618 and 786, anything in this zone, long as it's not at the double bottom, is good. So anything in this zone is good, and that just happens to be where he is. He didn't quite oversell enough, but I do see that some bulls tried to come in and help out. Not so sure, not the strongest amount of confidence, but basically just technically, that's what you're dealing with. Technically, this should have an opportunity to go from 22 back up to around 25, a $3 move back here. And then all that would do is create just a very, very tough box of consolidation until the next catalyst comes or something happens where a decision is made either out of that zone or under that zone. Okay. AST Space Mobile. AMD. This is a tricky one. I tried to put AMD in the survival zone because no one should have been trading it. They should have been happy with this tremendous win off of this bat pattern. They should have been saying, I'll come and check AMD out later on or some other time. Any trader, okay, I'll say this, and I'll be honest with this. Any trader who got crushed and they were long on AMD, it's kind of their fault because there was no reason to be long on AMD. A trader should have traded AMD and been out of AMD. If they understood advanced pattern recognition, they would have entered AMD on January 2nd, and as of January 6th, the day before it happened, they would have been out. So they should not have been involved in this. So that's why I kind of have it in the survival mode. Plus, once he was done with it, drops in a little bit of bullish divergence on the RSI, and then very close to retesting that entry area where he was in the first place. I wish I had more to say about it. I don't. I'm not going to start pulling up news events and things of that sort. I'm just talking technical analysis and harmonics only. So I got AMD in the survival zone. Would I trade AMD up out of there? It's kind of hard to say. I really can't. I need more. I don't have anything. I need another pattern. I need something. I don't have anything. But still have it in the survival zone just because of what it did that the traders would have won had they understood entering at $119 and riding up to $130. It should have been happy as hell, and it should have never wanted to see AMD again until it gave them something else like that. So any trader that got crushed on AMD shouldn't have been long anyway. Okay. Next up, Oklo. It's kind of fitting the same scenario, amazing advanced bat pattern for a tremendous winner coming from $18 all the way up to $24. And then, of course, the pullback, right? The pullback, they would have, of course, I wouldn't be mad at traders looking at that high, looking at that pullback, which is probably a 382 pullback. Let's just look at it real fast. It's almost a 618 pullback. And then this rally up here, this rally from $20 all the way up to $30, $10 move. They should have been done with it. So it's going to be the same story. Any trader that got crushed and lost money during this correction, they should not have been long in the first place. Okay, now I will say that's actually a trend. Low, high, outside return. New structure high, outside return to the 618. Almost oversold, pretty much. There's some volume coming in here, a little bit of bullish volume. This might be an opportunity to continue to go ahead and hang in there and give Oklo another shot. It's just, unfortunately, there might be like a little complex retest right here, right? Before the retest of the 130s. And if that did happen, then you could go for like an aggressive trader, a swing trader could go for even more extended targets up here to $36. So because this is trending, it's definitely, so it got there by using an advanced pattern and then started trending right into the zone in which you want to buy. Okay. And then, you know, you can look to continue to ride this trend. You just happen to use the catalyst to set you up perfectly. You just might have to wait for a little complex retest here in the $24 range, and then you could be off to the races. I don't know. We'll find out. Okay. EVGO, kind of like the same thing. Complex retest, double bottom, break and close, drop into the 618 retracement, kind of like in that box area between 618 and 786. Oversold at the time. MA coming under RSI. I just wish there was more to it than that. I wish I had a pattern or something else, but I'm still going to put it in the survival zone just strictly off the 2618 because it's such a phenomenal opportunity to get a retest or to continue to trend and, you know, do something like a A to B is equal to CD pattern where A to B is equal to C and D, something like that. So because it's such a phenomenal setup, my confidence is probably 50-50 on it, something like that. But so that's what we would do with EVGO or EVGO. This guy right here, I really like STZ, Constellation. Constellation would be a very, very long-term swing. So we don't have to worry about the catalysts and things that happen this week because we actually want this to fall. We want Constellation to fall down to $215. It's at $219. You want $4 more off of it right there. And if that were to happen, there is a very, very amazing, powerful bat pattern ready to be ridden up from 215 all the way back to, let's say, 249. Let me see how far it went past the 618 retracement on that. If that were to happen, yeah, even higher, 252. Okay. So very, very short and simple. This is obviously in a survival scope because I'm looking at it on the weekly chart. We want $4 more off of that. At that time, at that point, it will be extremely oversold. The bullish volume should show up at that point, and then there'd be an opportunity to trade this bad boy up for a killer. So this is when you just kind of like stand back and wait for it and kind of like see what happens. That's what I would do with Constellation. AVGO, kind of like the same thing. You don't have to really worry about what happened with the news catalyst and the Nvda type stuff. You want to sit back and let him come and give you this bat pattern. Let him come feel you. So be okay with Broadcom falling from 229 to 221. You're like $8 away. That's a drop. But if you can let it get down to 221, you got a very strong chance of trading this thing all the way back into the 230s. Very, very simple. Don't worry about the catalyst on this one. And it's not even done yet because you would also be looking for A to B is equal to C and D on that leg over there. You'd be looking for A to B is equal to C, D, and you're not there yet. So long way to go. So really not affected. Now, of course, it would have affected you. Like I'm on the. Let me see if I go back the last 2 days. Yeah. So yeah, they would have taken hits all the way back here. They would have taken a ride from 240 to 229, $11. They would not have been happy. That's a pretty significant move in the market. Another very popular one, QQQ. I'm kind of jumping the gun. I'm probably too early to be projecting an advanced pattern on here, but it's there. The movement is pretty much sidewards, so it would take some bad news. QQQ it can really swing. So trader would have to hope that thing could swing down, fill that bad pattern, give the traders a bullish opportunity. Until then, you won't have one. For traders who are long, who have a long bias on it, there's no trade. The only bullish trade on here will be way down here at 490. And that's $25 from 515 to 490. This would have to fall $25, which would crush a lot of traders and probably blow a lot of accounts if that $25 move happens. Other than that, it's kind of hard to say. If I were to come in closer right here, I could still keep this in the survival category. The catalyst from the 6 was still, that's still pretty devastating, from 528 down to 510. $18 move gonna hurt a lot of traders. And not only that, they should have saw it coming. If they understood advanced pattern recognition, it was right there in front of them. They should have been out anyway. If they understood advanced pattern recognition, one of the big boys, the advanced cipher pattern, was right there, just ready to kill him. I wish I could paint a skull on this. Traders who lost on QQQ, it's kind of like their fault for not understanding advanced pattern recognition. If they knew that, they would have been gotten out the way. They would have said there's no way in hell their bullish bias was going to survive and just blow this cipher. It just wasn't going to happen. Doesn't happen too often. This thing reacts like it reacted probably about 65-70% of the time. There is, I will say this though, there's some structure in the area. Not a lot, but there's enough stuff there to kind of say, yeah, I would put this in the survival zone, even though it just dropped back into it. So you're probably going to see a lot of traders looking to find ways to trade up out of that area. I don't really see a reason to, but it's possible, and you never know what people are doing out there. All right, and the last one is Hive. I want to thank you guys for hanging out with me as we ran through these things harmonically. Hive is the last one, kind of like that same thing. In this case, a bullish cipher pattern. Traders would have been winning and happy when he filled, and the catalyst came and screwed it all up. When they would have entered in the 270s, rolled up to the mid 3s, they would have been happy. They would not have made it to first target. Their only saving grace would be a complex retest of the cipher's filled D leg, and then to be able to trade that out. So again, there's no reason to be long on Hive. You need to let this price action come back down here. The entry for Hive is somewhere between 294 and what's the lower end, 278 to 294. That's basically the only outlook a trader should have, is let this come back into this zone. And then now, how confident do we feel that might happen? You're not oversold yet, and you have bearish, you have a lot of bearish volume coming in there, and you got the MA coming crossing over. So it tells us that there should be a pushback down into that zone, and then the traders can make a decision what they want to do. But you kind of want another shot at this cipher. You want this to be the one. You want to let this do the work for you. So thanks for hanging around. We got through all of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 stocks. So review it, look it over. Didn't do a lot of breakdown on the harmonics and the Fibonacci levels and ratios that create the advanced patterns. Just wanted to put them on display. And this was a good opportunity to show that no matter what, all these stocks we went across, the market moves harmonically and continues to create advanced patterns. And also, the thing that I want you to take from this is it's actually, sometimes you might take a loss if the market goes against you, but then you got to keep your eyes open, because even though it went against you, it might just be giving you another setup to get that back and potentially more, but everything has to come together and the opportunity has to be right with the right high enough combined technical score for you where things are kind of like in your favor, where you have the confidence to go ahead and make the trade and do what you need to do. All right. So that being said, this is Trey coming to you from the Harmonic Trading Club. You guys be safe in the market. Don't forget to start looking at the playlist for the Harmonic Trading Academy, where I'm actually placing all the stuff in great broken down detail. Like and subscribe to the channel. Share the channel with other aspiring traders, new traders, beginner traders, or traders who might be interested in structure analysis and advanced pattern recognition, identifying harmonic patterns in the market as they continue to present themselves over and over and over and over again. That's all I got, guys. See you guys on the next video.